Intel, what are you doing, girl? Dear God. Holy cow. Okay, so Intel just released their Q2 2024 results, and let's just go through it. Intel declined today 5.5%. After hours, down 19.69%. And let me tell you, it is warranted. But before we get into it, Shamao says to like and subscribe. Okay, so yeah, what were the expectations? The expectations were for Intel to post earnings of 13 cents per share, non-GAAP, on revenue of $12.76 billion, which is up 8.9% from a year ago. They're also expected to post data center revenues of $3.31 billion. That's a negative 11.1% change. Client computing, $7.28 billion. Network and Edge, $1.31 billion. And Intel Foundry at $4.22 billion. So let's get into it. Let's continue on. So what's the puts and takes? Number one is a recent announcement. A news article says that Intel prepares to cut thousands of workers. Employees hate this one simple trick to fix failing business empires. What a title. Let's just go. And Intel confirms it. Intel to cut 15% of jobs and suspend their dividend in turnaround push. Intel said on Thursday it would cut 15% of its workforce and will suspend its dividend in the fourth quarter as the chipmaker pursues a turnaround centered around its loss-making manufacturing business. And yeah, I'm just going to continue. It's just insane. Anyway, an article by Fabs says it is time to take Intel seriously as a chip foundry. So this is the thing. Intel is focusing on their chips. Let me actually hide myself really quick so you can see the screen. There we go. Okay, so what Intel is focusing on is becoming a foundry, basically selling chips to others. That is the primary focus of Pat Gelsinger, their new CEO. Well, not that new. He's been there for about 3 years now. So anyway, this is their focus. And their focus actually is on this 5 nodes in 4 years approach. And setting up all these fabs to create these chips for external partners. So anyway, this is their product roadmap, which actually they're on track for. So this is not the problem. They're doing good here. It's costing them a lot of money, but they're on track. So this is actually a good thing. They're on track on this. So this is good. Pat's doing good there. Okay, so what's going on though is Intel's CEO Pat Gelsinger revealed that Intel's own fabs are open to making chips for some of the biggest companies in tech. That even includes its long-standing rival, AMD. Now, AMD has a tight partnership with TSMC, which is their fab, and I don't expect AMD to switch from TSMC to Intel for other reasons. So what else does Intel have? Intel launches, actually, let's show myself again. Okay, so yeah, Intel launches the world's first systems designed for the AI era. Intel Foundry launches as the world's first systems foundry for the AI era, delivering leadership in technology, resilience, and sustainability. Intel Foundry unveils a new roadmap featuring Intel 14A process technology, specializing node evolutions, yada, yada, yada. Okay, so what's going on here also is that, a couple things. Number one is Intel's first customers for their foundry projects are Qualcomm and AWS, but their biggest one is Microsoft, which they announced earlier this year, actually. So here's the thing. Intel had to make 2 choices, and Pat had to choose. He had to make a difficult choice. He had to make a decision. And decision number 1, because Intel was struggling. Intel's process node was failing at the time when Pat came into power as CEO of Intel. So he could have gone one of 2 ways. He could have gone towards closing down their fabs and going through a fab, say TSMC or another, which is AMD's route, or he could double down on their own fabs. and expand their fabs and buy the latest machines from ASML and sell chips to others. That's the route that Pat chose. It's the far riskier route than the one that AMD chose. There is one benefit to going Intel's route, though. The one benefit is, in a hypothetical, if China were to declare war on Taiwan, most of TSMC's factories are in Taiwan. So if war were to break out or some sort of issue with Taiwan were to break out, Intel would be able to benefit from that because their foundries are, in America and in Europe. So that's the thing there. However, there is a cost associated with this, and it's not cheap. So yeah, to create a foundry, you need lots of space, good sources of water and electricity, and a low risk of natural disasters. Turner says that each chip factory takes a minimum of $10 billion and 5 years to build. So these foundries are expensive. And also, Intel is purchasing the high-NA EUV machines from ASML. They're actually purchasing the latest machines that are double the price of the machines that TSMC is purchasing. They're double the price, but they're more future-proof. They're better machines than the one that TSMC uses, but they are far more expensive. And we'll see if that plays out, but Intel's got to make it there first. They've got to make it there first. Okay, so what's going on also is that Intel is investing $30 billion to expand their facilities in Arizona as part of the CHIPS Act, which is a $52 billion thing by Biden several years ago. And also, they're building a series of foundries in Ohio. So planned investments, economic impact $20 billion. Planned investment to construct 2 new leading-edge chip factories in Ohio. Note, it says 2 factories, economic impact $20 billion. At full build-out, the total investment in the site could grow to as much as $100 billion over the next decade. It costs so much money to build these. Oh my God. Let's go. So as Intel's planning to invest more than $20 billion in the construction of 2 new chips, and then 8 chips for $100 billion, or 8 factories rather, for $100 billion. That's insane. Here's the Arizona factory. So anyway, what else is going on with Intel? What else is going on actually is this Gamers Nexus series of posts going back like half a year. And it turns out that Intel has an issue with their 13th and 14th gen processors. The processors they have a voltage issue. Intel actually finally admitted. They were denying the issue at first, and they were saying that at first they were saying it was an issue with the motherboard manufacturers being out of spec. Because what happened was the users of Intel chips started receiving these errors. Like GPU out of memory was the first major error that they started seeing. GPU out of memory. So first, obviously customers go to NVIDIA GPU. So they went to NVIDIA and NVIDIA said, it's not us, it's Intel. So then Intel says, it's not us, it's the motherboard manufacturers. So anyway, they got hammered on by Level 1 Tech, and Gamers Nexus sort of hammered on this issue for 6 months. And then finally, after 6 months, Intel finally said, you know what? It is our problem. And what Intel is saying is it's a problem in their microcode and then their 13th gen and 14th gen processors that is allowing an improper voltage to go to their chips sometimes. So over time, it's frying their chips for their customers, and that's what's causing this issue. And once a chip is damaged, it can't be fixed by software. It has to be physically replaced by Intel. Either that, or you have to, downvolt your machine. And who wants to make their machine slower? Just replace the chip. Have Intel replace your chip. Don't make your machine slower for this stupid issue. Another thing is Intel said that there was a period in 2023 in the 13th gen processors where there was an oxidation issue. So there was also a manufacturing defect for a series of chips. They are not saying how many. They're not saying what time period. They're not even saying what serial numbers were affected or potentially affected by that issue. So I'll just say this. Every chip manufacturer has had issues. AMD has had issues. NVIDIA's had issues. All of them have had issues. Manufacturing defects. It happens. It happens. The problem with Intel, I think, is their reaction to this. It took 6 months for them to even admit that there was a problem. In the meantime, they were just making their customers angry. Their customers are furious right now at Intel over this issue because their machines are crashing. Some of them, their machines are crashing several times per day. Every 20 minutes, some people's machines are crashing. So it's a PR disaster for Intel, and it's one they should have gotten in front of ahead of time. And they didn't, and that's on Pat Gelsinger. Here's another article on that. Intel CPU instability and crashing issues also impact mainstream 65-watt and higher non-K models. Damage is irreversible, no planned recall. That's the other thing is Intel should just recall those chips, and it's an insult not to. Okay, moving on. So let's get to the numbers. Okay, let's actually read the statement first. Okay, so here's the statement. Our Q2 financial performance was disappointing, even as we hit key product and process technology milestones. Second half trends are more challenging than we previously expected, and we are leveraging our new operating model to take decisive actions that will improve operating and capital efficiencies while accelerating our IDM 2.0 transformation. This is their Foundry model. Said Pat Gelsinger. These actions, combined with the launch of Intel 18A next year to regain process technology leadership, will strengthen our position in the market, improve our profitability, and create shareholder value. Second quarter results were impacted by gross margin headwinds from the accelerated ramp of our AI PC product, higher than typical charges related to non-core business, and the impact from unused capacity, said David Zinsner, Intel CFO. By implementing our spending reductions, we are taking proactive steps to improve our profits and strengthen our balance sheet. We expect these actions to meaningfully improve liquidity and reduce our debt balance while enabling us to make the right investments to drive long-term value for shareholders. Okay, so actually let's get into this cost reduction plan. As Intel nears the completion of rebuilding a sustainable engine of process technology leadership, it announced a series of initiatives to create a sustainable financial engine that accelerates profitable growth, enables further operational efficiency and agility, and creates capacity for ongoing strategic investment in technology and manufacturing leaderships. Yada, 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 yada. Okay, so capital expenditure reductions more than $10 billion in 2025, that's next year, compared to previous estimates. This is actually a combination of, so these actions include structural and operational realignment across the company, headcount reductions, and operating expense and capital expenditure reductions. As a result of these actions, Intel aims to achieve clear line of sight towards a sustainable business model with the ongoing financial resources and liquidity needed to support the company's long-term strategy. Okay, so what have we got? Reducing operating expenses. Intel will streamline its operations to meaningfully cut spending and headcount to approximately $20 billion in 2024 and approximately $17.5 billion in 2025, with further reductions expected in 2026. So they're going to fire even more people. They haven't said it officially yet, but this is official. There's going to be more people fired. More people are being fired. Intel expects to reduce headcount by greater than 15%, with the majority completed by the end of this year. Capital restructuring or capital expenditures reductions. Now fixing it. Okay, so this will decrease by 20% from prior projections in 2024, bringing in capital expenditures in 2024 to between $25 and $27 billion. Reducing cost of sales. The company expects to generate $1 billion in savings and non-variable cost of sales, maintaining core investments to execute strategy, blah, blah, blah. Okay, so let's get to the pretty sheet, and then we'll get back to that sheet. So yeah, on the earnings themselves, let's get into it. Q2 revenue in line, profitability below expectations. Implementing greater than $10 billion cost reduction, we went over that. 5 nodes, 4 years, nearing completion. So this is the one bright part. And honestly, I think this is the only bright part because the rest of this is freaking terrible. This report is horrible. Horrible. Let's continue. You'll see just how terrible this is. Oh my God. Oh my God. Okay, so lead Intel 18A, client and data center products powered on. That's fine. Defining and driving the AI PC, blah, blah, blah. Okay, so they go over the cost reductions. We actually just discussed that, so I'm going to move forward. We discussed this. I'm going to move forward. I mentioned AI PC footprint. So greater than 15 million units of Intel Core Ultra shipped to date. And yada, yada, yada. Sorry. Lunar Lake delivers up to greater than 50% graphics performance. Honestly, Intel has never really been known for their graphics performance. So that's here nor there. 40% lower power and 3x AI tops. They needed to improve their tops performance. AMD beats them on that. Q2 financial highlights, $12.8 billion in revenue. That's down 1% year over year. This is actually where it gets a little confusing with that previous statement. I think the previous statement had some sort of an error. If you go back to the estimates, it said $12.76 billion, and then they say up 9%. However, this report says down 1%. So there's, I don't know, I think Yahoo got it wrong. So anyway, let's just go with this report. Okay, so that's not horrible in and of itself. What's terrible is the gross margins. 38.7% non-GAAP gross margins could be the lowest in Intel's recent history. I can't think of a lower number in recent history. That's horrible. That's down 1.1% year over year, and it's down 4.8% below their outlook last quarter. Last quarter, Intel made an outlook, and they're 4.8% below that outlook. A quarter of 3 months. They couldn't calculate 3 months in advance what their gross margins are going to be. In 3 months, they dropped their gross margin percentage. They're off 4.8% in 3 months. That is inexcusable. Inexcusable. Okay, moving on. 2% earnings per share, non-GAAP. So actually that is not a beat. That's a loss as well. Again, Shama says to like and subscribe. So what was expected in the earnings per share was 13%, 13 cents per share. So they went from 13 cents per share to 2 cents non-GAAP. And that's down 11 cents year over year. And that's 8% below their outlook. Again, the outlook, 3 months. 3 months. How can they not calculate 3 months in advance to this degree? I understand there's a little bit of variability, maybe 5% up or down, plus or minus 5%. But this is huge. This is a huge miss just from the estimates 3 months ago. It's just terrible. I mean, here's the chart. Here's the chart. Q2 of 2023 had a non-GAAP gross margin of 39.8%. And here, look, at the turn of the year, it looked like Intel was making a comeback. Look, it looked like Intel just may make it to the other side of this. They just may make it to become a foundry machine like they should be. But look at this. Their margins went from 39.8% to 45.8% to 48.8%. Great improvement. Awesome. Amazing. I'm being serious here. Those are amazing improvements. And look at the bottom line. The operating income non-GAAP. $500 million, $1.9 billion, $2.6 billion. It looked like they were going to make it. They were fine. And then last quarter hits. $12.7 billion in revenue and 45.1% in gross margin. And then this quarter, 38.7%. Look at the quarter over quarter. That's like 7%. 6 point something percent quarter over quarter decrease in gross margins. Gross margins. How? And then their income is zero. It's just, oh my God. Okay, so anyway, moving on forward. For the client segment, the margins decreased from 35.1% to 33.7%. So you can kind of see the margin issue right here. In the data center segment, the worst ever, 9.1% gross margins in data center. And this is data center. So here's the thing. In data center, AI chip for data center is going to be the Gaudi 3, and they say that it's ramping. And this is what's supposed to compete with NVIDIA, the NVIDIA's AI chips, as well as AMD's AI chips. Intel really needs this to ramp and sell well. They really do, because these numbers are terrible. And then the networking unit gross margins declined as well. But also we got Foundry. Okay, so what Intel did actually a couple of quarters ago is they actually split their Foundry into a separate segment. Separate from the others. So actually, that's why if you look back, say a couple of years, their compute segments revenues will look a lot higher because a lot of that revenue now is represented under their Foundry segment. So again, why they did this split is so they can give an honest representation of how their Foundry segment looks, and this is their segment that's going to sell chips for other people as well as themselves. So this is why they recorded $4.3 billion. This is $4.3 billion internally to themselves. So basically they're saying, hey, we got to make some consumer chips. Okay, build it in the Foundry, charge at the Foundry, and then charge part of it to the compute, to the client group. Same thing with data center. Build it in the Foundry, charge at the Foundry, and then charge the rest of the data center. So it's split, is what I'm trying to say. Now, the Foundry needs to expand fast. So the Foundry's margins are negative 65.5%, and the operating income is negative $2.8 billion. Okay. So yeah, released Intel 18A ramping production in first half 2025. See, the thing is, Intel's Foundry is expanding, but they're not online yet. It's going to take some time for Intel's Foundry to come online. That's why the revenues are flat in the Foundry. So the new factories need to come online, but they're so expensive. We're going to go over that in a second. But yeah, this negative $2.8 billion is a huge decline. Altera is shrinking, and they're actually looking to make it an IPO. So Intel's going to IPO Altera in order to generate some cash. Altera is shrinking. Mobileye, not really too much to say there. It's an increase quarter over quarter. So the outlook. What's the outlook? So the outlook is for next quarter, quarter 3 is $12.5 to $3.5 billion. That is down $1.2 billion year over year. Gross margins 38%. That's down 7.8% year over year. Earnings per share non-GAAP negative 3 cents. So quarter over quarter, that's down 44% or 44 cents. Non-GAAP earnings per share are down 44 cents. They're projecting down 44%, 44 cents next quarter. And look at this decline in gross margin, down 7.8% year over year. This is unimaginably bad. Unimaginably bad. What the freak? Good God, Pat. Good God. Good God. And it gets worse. Okay, there's one more piece I want to show you. There's one more piece. We've gone through most of the highlights. Their cash segment is what I want to show you. Their cash segment. Up a little bit. Cash flows. Okay. None of those numbers take cash flow into account or free cash flow. None of those numbers. So what's their free cash flow? Well, okay, so this is a 6-month chart this is a 6 months ending June 29th, 2024. So for the last 6 months, Intel generated a net income, loss of $2 billion from operations. Okay, we saw that partially this last quarter. So Intel's building these factories. They're purchasing these machines from ASML to build these chips, and they're building these factories. This is costing them, for these last 6 months, $11.6 billion. So if you want to know their free cash flow, you take the $2 billion and subtract the $11 billion, or negative $2 billion plus negative $11.6 billion. That's a negative $13.7 billion in free cash flow year over year. The only thing that's saving them is this line item right here. There is one line item that's saving them. It's this right here. Partner contributions of $11.8 billion. Now, I'm not 100% sure what that actually is. It could be one of two things. It could be a prepayment for people to purchase these chips for them, say from Microsoft. Maybe, I'm not sure. They'll probably say on the call. Or it could be those subsidies from the government, the CHIPS Act, which is giving out $55 or $52 billion to these chip fabrication companies. It could be that. It's one or the other. I think it's either the subsidies or prepayments. But I'm leaning towards possibly, I don't know. We'll have to see in the call. But that's the only thing that's saving Intel at the moment. But yeah, these numbers are horrible. Horrible. So anyway, I give this report an F. Shama says to like and subscribe. Thank you for watching. Now I'll see you in the next one.